Business news now with Stephen Carroll. Hello there, Stephen.
Hello, Catherine.
Not talking about cocaine, we're talking about the price of oil, which actually slumped on Wednesday.
Prices tumbled by their most in a year after new figures show that stockpiles of oil in the United States rose to a record high. Concerns over a renewed oversupply in the market also hit shares in oil companies on Wall Street. The oil inventory report came after Saudi Arabia's oil minister warned the deal between OPEC and producers like Russia to cut supplies could revitalise the US shale oil industry. Well, the international benchmark for oil, Brent crude, fell by almost 5% in trading on Wednesday. WTI fell by almost 6%. This is the picture today. We're seeing a small rise in prices, but nowhere near regaining the falls on Wednesday. Prices still much lower than where they were earlier in the week.
And later on today, we've got the European Central Bank meeting, and this is, as ever, a much anticipated meeting.
It certainly is. ECB Chief Mario Draghi is going to be under a lot of pressure at this particular meeting. Interest rates are at a record low in the Eurozone. The bank is buying 60 billion euros worth of bonds a month in an effort to stimulate the economy. But for the first time since 2013, inflation in the Eurozone has reached the bank's target of 2%. Will that mean an end to these stimulus policies of recent years? Earlier, I spoke to Anna Stupnitska, global economist with Fidelity International. She isn't expecting any change from Mario Draghi today.
I think it's quite clear, actually, that this has been mainly driven by food and energy. So this is the pickup in headline inflation. At the same time, core inflation, so all the components without food and energy, remains entrenched at very low levels, so just below 1% for the past few months. And there are no signs that this is going to accelerate anytime soon at a high pace. So I think there is no incentive right now for the ECB to change their policy. And of course, there are risks to the outlook on the downside, and there is a very heavy political timetable in Europe over the next few months. So it's just not worth changing policy right now.
That's Anna Stupnitska from Fidelity International. Let's take a look at how shares are trading ahead of that decision. Markets have just opened here in Europe, and they've opened in the red. Oil prices not helping the fall in shares. Oil companies, of course, among the shares seeing the biggest falls. There are the pictures in Paris and Paris and London at the open. The retailer Carrefour down over 2% in Paris after their earnings missed estimates. On the other side, Aviva, the insurer, up by over 6% in London after their results. Over in Asia, stock markets trading generally lower. Again, that's being driven by oil prices, forcing down a lot of energy companies. Japan's Nikkei, though, still seeing some gains. It finished the day up 1/3%.
All right, back here in France, we report a lot on labour disputes, the issues of manufacturers, factories closing down. Stephen, you've got the story of workers at one factory who are pitching in and bringing the ideas themselves to save their own jobs.
There were big changes to French labour law last year, causing massive protests, and one of the most controversial elements of that law allowed companies to negotiate on working conditions with their employees. Now, that wasn't an issue for workers at two factories run by the tyre company Michelin. They struck a deal to boost productivity and keep the plants open, even suggesting changes to things like working hours themselves. Clément Bonnereau has the story.
Coming together to save jobs. This Michelin factory in Vannes, Brittany, was facing an uncertain future, with dozens of machines no longer in use. In order to make the company more competitive, unions brought both managers and employees to the negotiating table.
We had to learn how to work together on different levels. It wasn't always easy, we had doubts, but I'm happy it all worked out.
After 13 months of talks, employees agreed to make key concessions, including working longer hours and on weekends. In return, management agreed to maintain all jobs and invest 22 million euros in the factory, a highly unusual deal in France.
Labour talks mean that we talk and listen to each other, that everyone is able to say I agree or disagree.
A similar agreement was struck 2 years ago at another Michelin factory in Roanne, near Lyon. All unions, including ones on the far left, say it was the right decision to make.
Today investments are pouring in again. We're working on a huge project, so no one can say it was a bad agreement for the company.
Here, too, employees had to make concessions.
Before I didn't work on weekends, now I do. It's hard, but I have days off between each cycle, so I don't mind too much.
2 years on, the Rouen factory has become profitable again, thanks to a €50 million investment in new machinery. All jobs have been saved.
One final story from Stephen. Apparently the scrapping of all of those banknotes in India at the end of last year caused huge problems for millions of ordinary people, as we know, but apparently it's also caused problems for the super rich.
The number of billionaires in India has fallen after the country's cash crisis. The Global Rich List, published by China's Hurun report, found that India had 100 billionaires as of January 15th this year. That's 11 fewer than a year previously. The report's authors say the fortunes of the company's super rich were hit by that government's decision in November to scrap 86% of banknotes in circulation. They probably weren't queuing to exchange notes outside banks, to be fair.
I was going to say, what's the implication that they just sort of couldn't be bothered to go and change them because they're so rich?
Still all those worthless notes just piling up under their bed.
Yeah, maybe using them as insulation, you never know. All right, interesting indeed. Thanks so much, Stephen Carroll, our business editor.